All right, see it on YouTube.
Checking. Ooh, the last live video on your channel was us.
Yes.
Wow, nice. I don't see it yet. Okay, yep. It wasn't on your channel yet, but it's showing up on the subscriber page. Can everyone hear us? Okay.
What's up, Dumpster Fire 6732? Confirm we got the audio working this time. If we one-shotted the audio, then we are streaming geniuses.
I'll share this to my channel too.
I've been really enjoying I've been watching this golf live stream on Sundays. It's like a watch along with the main broadcast, but it's like other guys they're just more fun to listen to.
Nice. Who is it?
It's
Do you
Dan
remember
on
the
Golf.
name?
Yeah, Dan on Golf
Okay.
is the name of the channel. But they do a great job. Awesome. Got the thumbs up. Really appreciate it, guys. We got Sam here. We got the audio working better today. Last time he was a little skeptical of STRC. So today it sounds like he's been stretch pilled, and we're going to deep dive on that. Let me get this into the Discord for that crew, and then we'll stop messing with stuff and we will hang out and talk. And I feel like we're both doing better on like time today too. So I'm feeling relaxed.
Yeah, last time I felt like it was a race because I don't remember exactly how much time we had. I think maybe an hour or half an hour or something.
Yeah.
And then we got like 10 minutes or so. So yeah, this is great. The baby might be sleeping too in an hour, so I might be able to go even a little bit longer, but we'll see.
That'd be awesome. Yeah, I got all the school off out of the way.
Nice. I have to ask you about BMNR as well. Yeah. I don't hold any BMNR, but I just looked at the options premium today.
Yeah.
And I might hold it soon because I just sold a couple puts on it because I can get 5% over a month with a strike price like 16% below the current price. So just so juicy. The premiums are huge because it's so volatile, obviously. But we can talk more about that later too, because it's a lot.
You'll have to tell, we'll have to get into your whole options strategy because I'm not doing anything with manual options. But all right, dropped in the Discord. Chat's working. Let's get one more thumbs up to just confirm that the audio is working, and we should be good. So. Awesome.
Are these some channel members or top fans? I don't even know.
I think
how
it's like
works anymore.
Like it gives scores. It gives scores for live chat. Just participation, I think.
Okay.
So. All right.
So post a lot in the comments.
Yes. Perfect. All right, everyone. Yes, good to see you, Sam. I'm glad that we have more time today to just hang out. So yeah, let's just start off on STRC. What has changed? Where were you? Remind us what you did think about it and like what has changed.
So I didn't really like when MSTR started offering so many different products because I think it makes it very difficult to analyze MSTR. So just from the MSTR perspective, I hold some shares from not this bear market, but the bear market before 2022. And it's not like anything that I need to sell or want to sell or anything like that. But it's just when people talk about the value of MSTR, the MNAV, it's hard to calculate because there are dividend payments, there are different preferreds and that kind of thing. So I kind of got to the point where I was like, you see a big amount of demand right when they start a product, like even STRC was like $2 billion first week. And then it just goes down. And then it seemed like every month they were announcing some new product that's slightly different. And it's just, I was just annoyed. But they kind of stopped doing that. And I've had some people ask about STRC. There's some people that really like STRC on my channel too. And they talk about how the taxes are deferred and all that kind of stuff. But being that I've been in crypto for not as long as you, but half a decade, and obviously investing longer than that, whenever something seems too good to be true, it 99.9% of the time is. So, 11.5% yield seemed too good to be true. And I get how they're going there. They're taking it and they're getting 40-50% on Bitcoin, and they're selling STRC. And they're paying out 11.5%. So they're like, oh, I get 5x upside or 4x upside or whatever. But again, it just seemed like before they even grew their big cash pile, where they diluted and got like a couple $1 billion in dividend, like future dividend cash. Before that, it seemed kind of risky because, they're just leveraging up. It's like a person taking out 11% mortgage and going and buying Bitcoin with it. Like,
Yep.
it might work if you can last long enough, but if stuff really hits a fan, it could be bad for them. So I just didn't want to do it, right? I got that they were buying more Bitcoin, which indirectly, if they stay alive, MSTR stays alive, it's good for Bitcoin, right? Obviously, it adds some more leverage to it, so it could be a little bit riskier if they had to liquidate Bitcoin, but I don't think they would, or they will have to. But then what hit me over the last week, when they had more and more Bitcoin sold every day, or bought every day, and more STRC sold, is that these products, or MSTR versus STRC, are kind of inversely proportional to each other, where if Bitcoin goes up a lot, people go risk on, they want MSTR so they can dilute shareholders and they can buy a bunch of Bitcoin. When people want to go a little bit more risk off, if they still want to invest in something, that they might turn to yield, right? Like you've talked about yield recently, and people turn to that in bear markets. Like, oh, dividend stocks look great when they're yielding 4 or 5% in a bear market, and they've held up better versus growth stocks. So people naturally kind of emotionally want to buy that kind of investment. So it hit me last week that these are inversely proportional. So it's going to be a lot easier for them to buy during a bear market, now that they have STRC that offers 11.5% yield, and the Bitcoiners that maybe are like, I have enough exposure to Bitcoin, maybe I haven't built up any kind of income stream, or maybe I want to diversify a little bit because I didn't take any profits last bull market, and I'm still overexposed to Bitcoin. I think it looks really attractive to buy STRC and start getting those dividend payments, and there are all the other like mechanics of it, like the deferred taxes and stuff like that. So it hit me that they can buy a lot of Bitcoin even in bear markets, which was always the hard thing, because you can see them buying $50,000 Bitcoin a week during the bull market, but then bear markets hit and they're buying 100, 500, 2,000, 200. And it's like, that's when you would want them to buy more, but it's just so hard to sell shares when they're down 80%. So the other cool thing about STRC that hit me is it's never too late to buy STRC, which is really rare. Like if I buy it now, or you bought it a year ago, the only thing I've missed out on is the yield. There's no buying it when it's 30% overvalued, like BMNR or MSTR, or like when it's already gone up 300%, and you're just wondering, should I buy? Is there still another 30% pump in it? So I don't feel like you need to be rushed to buy it. Even like I have not bought any STRC yet, but I realize STRC is good for me as a Bitcoin investor. Again, assuming that MSTR doesn't blow up because of $5 billion a year in dividend payments, which they're not at that yet. They're at like a tenth of that. But it just is really interesting because it won't get overvalued. Maybe they lower the dividend payment or something if they wanted to in a year or two, because there's so much demand. But I don't really see that being an issue either. I don't think they'll really want to cut the dividend payment, because then people will be more worried that they're going to continuously cut them. So I don't know. It's also something that could be really easy to dollar cost average into, I think, for investors. Like I know you have your portfolio, and you could just turn on drip and continuously reinvest back into STRC. And I think people will do that throughout the bear market too, even just with new income. So all this stuff kind of hit me at the same point. And I don't hold STRC, but I realize for everyone that buys Bitcoin, it's probably a good thing because there's so much demand now for Bitcoin. Unless people really think MSTR is going down to zero.
Do you hold MSTR common?
I do.
And you've done that for a while, right?
Yeah, 4 or 5 years.
Okay, so this is
swept some money into the bear market.
Yeah. So just responding to some of the stuff you've said so far. First off, I agree that they one downside they launched too many in 1 year. And we can say that out loud but so did it take iteration and testing it to ultimately get to STRC, which was like the fourth one that they launched? Yes. So in that sense, it's good that they like started it and did it. But now sitting here today, are there too many? And is that part of what makes it hard for people to understand? And especially for people that have been MSTR common holders for a long time, dealing with the Bitcoin bear market and the launch of new things, that's extremely frustrating. Super frustrating. And so my perspective for sure is different, and like because I haven't been MSTR common holder like the entire time. And I just recently, so I went to the True North event in Vegas and at Strategy World, and I was only there for the True North day, but I don't think that's being talked about enough, that there are, like, I have empathy for that like there are too many. And because the interest rates, the yield on each of them are kind of close together, which makes it hard to value like which one you want or whatever. And so, yeah, I definitely, I get that part. And then also something I struggle with is just the concept of Bitcoin treasury companies. Maybe we can talk about this like after stretch, but it's like Bitcoin treasury companies being valued at more than MNAV. I don't know about that. Like, I'm extremely just neutral on that. I don't have a super hard opinion on whether they should be valued higher than MNAV or not. But what I would add to the thing that I like about it, Pile, is I like when Strategy tells their story and Fong tells the story and Saylor tells the story about how the convertible bond market was this small market. And they went into it and went to the end of it and got all of did more volume than anyone had ever done in it. And now they're doing the same thing in the preferred stocks market. And their preferred stocks are now more accessible to like retail people and regular brokerage accounts than any preferred stock ever. And they have actual brand names. I buy that whole part of the story. And the best. I buy it even more listening to, at the True North event, there was the guy, I'm blanking on his name right now, but I said it in a previous video. The guy who did the IPO for the investment banker guy from Barclays that did the IPO on all four of the preferreds was there and was talking. And it just felt good to get his perspective as he doesn't care about crypto really, or big. Like, he's just an investment banker. Like, he's just an investment banker. I sell IPO stocks and I make money by selling IPO stocks. And he was like, yeah, this is what they did, and like they're transforming this thing, and yeah, it's different and novel, and we're happy to like support the innovation. And so, and one more thing, then I'll throw it back to you. All of this is also paired with the long Chamath article that he wrote yesterday. That like one of his literal tags in the thing was, if AI removes the moat of every company in the S&P 500, and then all the companies go from trading at 20 and 30x multiple down to trading at like a 7 multiple because you can't reliably predict cash flows into the future, then effectively growth stock investing as we know it today is not a thing. Like, it's just not a thing. It has to be completely changed. And that's where I've been saying is that if Stretch is going to force more companies to become dividend companies, and it's going to force this conversation between what is growth investing and what is income investing, and which one are you do you actually need right now? And companies that aren't paying a dividend or are growing faster than either the S&P 500 or Bitcoin, whichever, and there's a fight right now for which one is the benchmark. Then you're caught in no man's land, and your company, public or private, is not gonna be able to get any investment. And then you pair that with the whole private credit stuff of how private credit is potentially having issues, and companies are going to need to start making money and start paying the money to the investors. So that's what I like about the whole them popularizing the concept of preferred stocks.
Yeah, I think they're basically trying to get investors wherever they are and trying to sweep up whatever kind of liquidity they can into their products to go buy Bitcoin. And if you can sell it to someone that doesn't even like Bitcoin because they look at the balance sheet of MSTR and they look at the mechanics and they're like, well, I couldn't care less what Bitcoin does, but assuming it just stays at the same price or goes down a
Yeah.
little bit, it doesn't matter.
Yeah.
We'll get our 12%.
Yep.
Then yeah, I think they can sell it to a lot more people. And it might be one of those things too, where as it gets bigger, it gets easier to sell to people. Because
Definitely.
if MSTR has some product that they might cut next year or something, or like there's $100 million into it, you don't know if they're really going to back it up versus something that's worth $10 billion and they're getting $1 billion a month to go buy Bitcoin. Like they're going to take care of that. They're not going to make a wrong move and screw
100%.
investors.
And so this was another thing from the conference. There's a lot of funds out there that they can't buy anything that's less than 3 years old. So we're like, it's way early days on this. But I agree with that. The bigger it gets, the easier it is to sell. And a backstop that I also always like to bring up is the company can buy it back at 101 at any time. And so as far as like backstops that will keep it trading at par, that also is what's going to stop the plus selling more shares, but like it's never going to rise higher than 101 because they can buy it back at 101.
Yeah, it is interesting. And I think they're like, I was just thinking about this at like ground level up until this last week. And then last week it hit me, well, what if you could sell put options on it? And I was trying to like muddle through while I was walking outside talking to you about this in a voice note. But I was like, what if you could sell put options on it and lock in the ability to sell at $100, maybe pay $3 a year or $4 a year in premium. And then you get the 11.5% yield minus $4, you get $7.5. And then like guarantee all upside without having a downside. But I don't think there's enough liquidity. There's a massive spread between like the sellers and buyers. Buyers want to buy at 4 and sellers want to sell at 8. So basically you get the 3.5% that you get from just a treasury. But I think as it gets bigger and more liquid, that spread could kind of tighten, and maybe you could get a 5.5% yield with protecting all downside when the U.S. Treasuries are giving you 3.5. And then like I would feel comfortable putting in a tenth of my net worth and selling put options. So that way I could generate without any risk at all. But yeah, that's not quite there yet. But again, you don't have to feel too late because you're just giving up the 1% yield a month basically. And the VOO gets about that. So as long as you're not just sitting in cash in a checking account when you could have it somewhere else, you're probably fine. But yeah, I don't know. It gets more and more attractive as I think about it more.
Talk to me about that because you're the VOO stuff. So VOO does pay a dividend monthly?
No, quarterly.
Quarterly. Okay. Quarterly.
Next couple of weeks. Yeah.
And how much is it?
It fluctuates obviously on the price of VOO at the time, but right now it's around 1.1% a year.
Okay.
So 1/10 of STRC.
Yeah. How do you think about so it's like how do you compare how do you think about the principal moving of VOO? Like you're in it for growth or you're in it for protection, you're in it for savings? How do you talk to me about income versus growth in your different buckets.
I'd say I'm at the point where if YouTube goes away, I could retire. And I've talked about that before, and it's been like a scare where I got kicked off YouTube for a week, and they said like, if you do this again, it's 2 weeks, then you do it again, you're kicked off forever. And like, they wouldn't tell me what I did wrong. So there's no way of like trying to fix it. So like, I think about this stuff every single day. I model out like the 4% rule. You can take 4% of your portfolio, invest in the S&P 500 and live on that a year. In that sense, I think of it as savings. If stuff hits the fan and I have to retire like right now, or like I'm not going to go work a normal job again. So I could make money other ways, but I think of it like right now as savings. It would protect our spending ability for the next 40 years. I could spend it down, and at the 4% rule, it's not going to grow that much, maybe a little bit, because 4% rule is kind of conservative. But assuming I continue to work, then I think about it as growth, because it will double every 7 years. In real spending terms, it's more like every 10 years. It, then, yeah, I think it will underperform Bitcoin, but I think there's much less risk in it than Bitcoin. Like the chance that the 500 largest companies, or like, I don't even know how any like, what's it called, counterparty risk happens at Vanguard. I think it's like almost zero. Yeah, I bring that up because it's VOO, it's Vanguard's S&P 500. But I think the chance that these companies go down to zero is basically end of world situation, or like, I don't know, the continuity, what's that called? Where AI takes over and then like hacks everything, or the value of money just goes down to zero or something. So I think that risk is a lot lower than something happens to Bitcoin. Bitcoin's one asset versus 500 different companies with massive products and stuff. So
and it's a dynamic index, right? And so it's like whatever is happening in quote unquote innovation, the index rebalances itself to where, like, if there's winners and losers within the 500 companies, and company 450 eats the lunch of company 2, and it's this wild upset, the index just rebalances into company 450, right?
Yeah,
that's the thinking. Yeah,
exactly. And I think as long as you think that the economies of the world are going to continue to grow, like even if the US didn't necessarily grow that much, but I don't know, China or India grow, like the S&P 500 companies still sell to the, like McDonald's is still going to have restaurants in India. Apple's still going to sell products. So as long as the world continues to grow, the S&P 500 will continue to grow. And I think about it as like each of these 500 companies has, I don't know, 50,000 people on average working at them. I don't know if that's right, but 20,000, whatever it is. And each one of those people is trying to make the company as profitable as possible, generally. So it's like you have an army of tens of millions of people all working to make you as much money as possible. And just historically, it performs really well. I think at the end of the day, like you can look back and say, yeah, there are big drawdowns, but as long as you could like not pull a significant amount of money from it in those big drawdowns for like 5 or 10 years on average, you're going to make money, and you're probably going to end up with more money than you think.
So, and what's I want to ask this question and then get to where you see STRC fitting in. So what would you say to someone? What would you say to an S&P investor who, like, their all of their savings and all of their retirement is in VOO, and then they have a primary residence and they haven't made a decision on Bitcoin and crypto? What would you say to that person? Why should they care about Bitcoin if they should?
I think Bitcoin can be viewed all different kinds of ways. Obviously, at the beginning stages, it was just people trying to protect their own wealth from other people, and they could actually custody it. Now, you can take it either from the, like, I want something that I can take out of my country if I get attacked, or something that's not like geo-specific, like rental property. Or you can look at it just from a pure investment standpoint, which is IBIT or FBTC. Like, you don't care about self-custody. Then you're just caring about the return. So let's say they're talking about throwing in their brokerage with FBTC. Because I think the other side is easier to pitch. Like, no one can take it from you. It's simpler. It's performed very well over time. There are massive institutions that are buying Bitcoin right now, and will continue to buy it. It's going to be in retirement accounts, whether you like it or not. You're already buying it in your retirement account through various companies that are in the S&P 500. They have small exposure to it, and the supply is fixed. So unlike everything else in the world, politicians getting greedy doesn't affect the supply. So in theory, you have a significant amount of buying pressure over time. The price should go up exponentially. And yeah, we're in a 40% drawdown now. It's probably worth putting, 5% of whatever you save each month in it, or 10%, just to get a feel for it, and you'll pay attention to it more. And then,
so for that VOO investor, the reason is because it's exponential. Like, it has a reasonable exponential upside compared to other choices, and combining that with the, like, relative safety of VOO. Like, basically the pitch is you have room for more volatility. Like, we understand that you might be trying to avoid it, but you do have room for more, kind of, right?
Yeah, I think that the upside is you get a much better return. I mean, you can look at history and like 2% Bitcoin and 98% cash did better than the S&P 500 historically, but we're not in those times. But you could point to that and say, just a small exposure could help you a lot. And if it goes down to zero, which it probably won't, like 99%, 98% certainty it doesn't, you're still going to be fine. You probably won't even do you know if your retirement's at 20,000 or 19,000 like each day? No, you don't really know. So it'll be fine, but there's massive upside, I think, to it. And if you're talking about like what's the best way to retire, maybe 3-4 years sooner, 20 years from now, it's probably Bitcoin. And also the other thing is it doesn't take any more work. Like, I think people like real estate because it seems sexy, like, oh, cash flow. Oftentimes, like 98% people I know don't know how to run the numbers. Even people that I know that run numbers all the time, they overestimate how much they're going to make from rental properties all the time. Because their stuff comes up, or they don't even think about like CapEx that doesn't occur for 5 years. And like, even I put CapEx in, but I don't know what the cost of a roof is going to be in 10 years. So it's like an estimate. So people like to think about that, but there's so much incremental work that goes into that, okay, maybe you make $100 a month on cash flow and there's some appreciation, that kind of thing. But like, if you're working on it yourself, is it worth your time at $10 an hour, $20 an hour compared to Bitcoin, where you buy more and there's like, you don't need $20,000 to buy it, like a rental property or 100,000, and there's no incremental work to it. Just like VOO, you have $1,000 or $50,000 or $50 million. There's no extra work. There's no extra accounting. There's no extra, thought process behind it.
Yeah. So where do you see, I think that's fair. And I think
you can push back on it too.
No. I think I'm having more empathy for the VOO position. And that's why I do kind of think that which one is the benchmark conversation, Bitcoin or S&P, is going to get more and more of a popular discussion. And right now, it's not widely accepted that is a discussion, but I think it is one that will happen. And that's what I think on that. But then, okay, so outside now to STRC, outside of the protective puts, so seeing that the liquidity on the protective puts is not high enough in order to do what you wanted to do, where do you see STRC fitting in for you personally?
Well, I haven't bought it yet, like I said earlier, but I think as time goes on, and especially because I don't feel like there's a big time component to it, I think I'll naturally just absorb a lot more information about it.
Yeah.
Like, I wanted to ask you what you think the biggest risks of STRC are.
Yeah.
And my thought is that, just before you even get to it, I guess, like, there are multiple levels of risk to STRC. One is Bitcoin goes down. Second, MSTR goes down, whether it is 0 or 90% or whatever. And then there's STRC, maybe like it gets reduced in the dividend or something because MSTR screws it up. So that's kind of my thought. And then I'll get to kind of how it fits in.
Yeah.
But if you want.
So I think the biggest risk to STRC is, we've seen this, like on aggressive Bitcoin dumping, STRC comes under pressure because people think that MSTR won't be able to pay the dividend, and so STRC comes under pressure, is like the biggest general way of like trying to explain why it happens. And then
is that just like people see it go down there, like, oh, STRC is connected.
Yeah, they just think, I just believe, I think there's lots of things happening. Like STRC and preferred stocks are hard to understand, and a lot of people have never heard of them. And then STRC, like, people think that it's just like Bitcoin, that, oh, MSTR is Bitcoin, this is Bitcoin, like what, like, right? And then there's some people that go off on the rabbit trail of like the return of capital thing. They're like, what do you mean you're paying me back with my own money? Like what? Like, so there's lots of layers of like the pool of people that understand the 5 or 6 things that you need to know about STRC in order to feel comfortable with it is like small. Mm-hmm. So the people that bought it only knowing 3 of the 6, because they, for whatever reason, don't like get scared when Bitcoin, go aggressive dumps, and then they punch it down. And so it gets punched down to like 93, 97, right? And then you see, as soon as the aggressive dumping stops, it will naturally float back up to 100. I put this site in the live chat. strc.live is just a good tracker of it. So yeah, the biggest risk is that enough people, like the biggest risk I think is that it just like sits at like 93 for like months. That's the biggest risk. The most likely bad thing, the highest percentage bad thing that would happen is that it sits in the low 90s for just months and can't flow up for whatever reason. The reason why I think that that's the worst case is because of the ability for them to call it back at 101. So they can call it back at 101, and you have the people that are willing to buy it at a discount and watch it flow up to 100 and then sell it at 100. And yeah, the buying at 101, like, because I don't believe that there's actually a catastrophic, I don't think there's a catastrophic outcome for STRC, because I think they would just buy it back at 101 and admit that it didn't work. And I think before they even get to that, I think they would start canceling the other parts of the yield curve. On their fourth quarter earnings call, this is what they're focused on. This is it. Like, STRC is what they're focused on. I believe Michael Saylor is betting his entire personal credibility and the company's entire company credibility on STRC. And I think that that's why I'm comfortable with it, because of all of those kind of, I call them like backstops to it. And yeah, but I'm also but I weirdly pair that with like not really caring about MSTR common, which is weird. And I've tried to like even understand like why do I even personally feel like that? And I think it's just like I don't know if I agree with the whole amplified Bitcoin thing. Like I don't think there's a reliable way to price Bitcoin Treasury common stock via how much Bitcoin it has, because I believe that common stock in general has a value accrual problem. I believe the regular stock market has a value accrual problem the same way that crypto has a value accrual problem. And so when I read that Chamath article, and when I think about private credit, and when I think about income investing versus growth investing, I'm like, and when I think about my own history in corporate America, so I have lots of baggage. So I'm bringing lots of baggage to the thing. It's like, dude, I don't want to care what a CEO or a board is like gonna do. Outside of a very like the contract of how STRC works is written down. Like again, can they change it? They're a board. Yeah, totally. Like absolutely.
Well, that's one of the beautiful things about Bitcoin in the first place, is that there is no CEO, there are no earnings reports.
Yes. Yes.
But going to MSTR for a second, it's so complicated. You could probably run an AI all day, every day, just evaluating the price of Bitcoin versus how much they have to pay in dividends versus the cash flow on their business versus their ability to issue cheap debt versus what they've said recently and where they're projected to go in the future, what kind of products they're going to use. Because I understand you mentioned you're not sure about MSTR or another treasury company selling for over what their Bitcoin is worth. On one hand, I think if they can get access to cheap capital, which I think is kind of the story of MSTR at first, they could get access to cheap capital, right? Maybe they're paying 2% instead of us paying 5% for extra money. If they could pay 2% and you buy into that, I think they should be worth more than their Bitcoin. Just like if I had a company that just bought VOO and I could buy it and you could borrow, or we could borrow for 1%. Like, that's valuable. That should sell for over the price of whatever VOO is worth, because you could, in theory, just like double up and take on a lot of leverage really cheaply, and it would do well on a risk-adjusted return. But they also have drag. They have employees. They make mistakes, right? Like, if they're all of a sudden, they have 300 employees that they have to pay salaries for, and they're dragging down 50 million a year, and then Michael Saylor's being compensated. Like, there's just so many things going on. It's like, does it make sense to even try to figure it out? Like, I guess from maybe if you're a big Bitcoin investor, but again, if you're spending all this time valuing MSTR for your $2,000 investment or something, like, it's probably not worth your time.
Totally.
So
totally.
It's so much going on.
Right. Which is why, okay, so like I feel like what you're doing with VOO is what I'm doing with STRC. I think that's actually because so the simplified yield curve in my mind is like, so STRC and is like medium to STRC is cash longer than 1 week of holding. Okay. STRC is, call it 30 days. STRC is cash with more than 30 days of holding it. Bitcoin is in the middle and doesn't pay any income. BTCI is between stretch and Bitcoin, and it pays income. And then on the aggressive side, on the amplified Bitcoin side, they now have a leveraged BTCI, which is called XBCI. And that is my amplified Bitcoin. And it's the same reason why I like BTCI over Misty, because it's income without the board and CEO risk. So when I look at my own investments, I'm not invested in any CEO at all. I own Bitcoin, and I own financial instruments that pay dividends or leverage Bitcoin. And then I hold the Bitcoin money market because I believe that Bitcoin is equivalent to the S&P as far as like the index of the world and of what the growth rate means. Another fun thing about STRC, I think that's going to start happening, is the yield that the STRC pays and the cost of like hard real estate money or like Bitcoin backed lending is basically the same thing. Like, it all floats between that 10 to 12. So the cost of, call it semi-hard money, like fast fintech money, and STRC is the same. So that all of that is putting pressure on treasuries to reprice and like dividend and stocks to reprice.
Yeah, that is interesting. And I wanted to bring this up. I funded a hard money loan recently.
Nice.
That pays 12%.
Yes.
So it was through...
Dude, the fact that you did that. So yeah, compare that to STRC. Tell us about it.
Yeah. So it was someone that I've done real estate with before. He actually had a YouTube channel too, but I won't point it out because they're real estate deals with other people. But I've done real estate with him before, and we got a really good deal. He has been interested in hard money loans for a while. He knows someone that runs, I want to say 8 figures a year in hard money loans, and it's scaling quickly. So he connected me with this guy. There's a possible business component because I know a lot of YouTubers and a lot of them are like heavily exposed to altcoins and have no other like investments or cash flow or anything. And YouTube's really risky in general, or volatile. So there's like a potential to build out a business behind this too. So this is kind of me testing it with that other guy to see if it works, how well it works. There have been no defaults by this guy, and like naturally coming from crypto, I'm so cautious. I'm like, how is everyone scamming me? Like every level,
Yep.
how is someone scamming me? What are they lying about? I look up everything. Like they connected me to a law firm to sign documents. It's a real law firm. I called them. Like I guess they're like, maybe you could cheat it, but it probably not.
Yeah.
So I go through this, and this is all for a 12% return. But obviously, like the first level is always the hardest, like when you don't know anyone. But like still, I have to go into a bank, send a wire. But I wanted to test it. I've done this with other things too. Like I've tested things just to see the process, even though I know it's not worth it. So if it was something scalable and I liked it, it could give me optionality in the future, kind of like option selling. Like a lot of the time, option selling doesn't actually outperform just buying and holding. But it's nice to know that if you needed cash, like you could get more cash from selling options, right? On the less risky side of options. So I'm doing.
Hold on. First off, before you even finish the story, I already just want to hold on, guys. Hold on. Can you still hear me right now, or did it stop?
Mm-hmm.
Okay. Okay, good. I think I stopped the double then too. Sorry to interrupt the story. First off, I just want to, you testing things and you seeing it as a business, I want to like slam down on that and be like, I love that. Okay. I love testing things and seeing that as a business. And the fact that you have that within your control and you're seeing it as a business, that is better than STRC. And I think that's an overarching thing that I've been really coming to myself on the last like 6-8 months is like, no, bringing more things back under your control and seeing yourself as a business and seeing your own investments as a business. And like how I said, I'm not invested in any outside CEO. And so, I want to like just really fast shout out, like there's to one of my sponsors, Limits Express is a wholesale on Walmart thing that I've been doing as a test to start a business. And they target 12% quarterly is the average return that their clients see. And in the same way, I'm holding that with one hand and I'm comparing that to BTCI. I'm comparing it to STRC. And there's an underlying kicker component that I've talked to you a little bit about that like where I live in Southern California is a very logistics heavy, wholesale e-commerce heavy part of the country. Like 40% of US imports get off the boat in Long Beach and San Pedro and they go on trains through the Inland Empire of California. And so I have access to small warehouse deals that happen in that area. And so if I'm able to learn the wholesale game and learn the e-commerce game, that is a business. Like I'm 34. Like I like real estate, I've talked about it on the channel. Like there's a world where I'm able to vertically integrate small warehouse with understanding the e-commerce game and then be selling things through Amazon, through Target, through Best Buy, because everyone works from home and everyone, like I love talking to people about how they get all the stuff from their house. So yeah, I just want to really hammer down on that I love that you're seeing it as a business, and I love how you're comparing the returns you can get as a business to the returns you can get like on stocks. So super agree with that, man. And that'll be awesome to follow and watch.
Oh, thanks. Yeah, and like a lot of it comes down to taxes as well, not just time and taxes, because it's going to be taxed worse than VOO, long-term capital gains, because it's active income. So I'm paying 40% versus 15 to 20%.
Yes, but that's where then real estate professional status. But then if you track hours for real estate professional status and you buy real estate, then that flips the on paper real estate losses into active income, which can count against your active income. And that's the reason why integrating real estate with whatever the active income is the literal thing that the most wealthy people in the United States do.
Yeah, I think I need to talk to my accountant about the real estate active status too, because I've heard of a couple other people doing that, and I don't think I've done anything for that. But also, I don't have much leverage in my portfolios, in my properties. Like I only have one property that has a mortgage, and I have a lot that don't. So I think my depreciation kind of just offsets the cash flow at the end of the day.
Yeah. But you can bonus depreciate. So then you get a study done. Done that breaks up all the components. I just did this. I need to do a deep dive video about it. But like I actually did this year for the first time. The engineer comes out, they document everything in the building, and then they give you a report back that's like, so then the cabinets, instead of depreciating on 30 years, they depreciate on 7 years. And then you're able to take all of that in year one. So that's the game.
Yeah, especially if you have a big income year,
Mm-hmm.
which I've talked about that too, but I haven't dove too far into it because I always think about it in the last 2 months of the year, and that's like,
Yeah.
that seems like a rush. But yeah, I don't know. I know that you've been focusing a lot more on income, and I think I want to get your take on this. I feel like income is undervalued. I know that it seems a lot harder to get to than like overall net worth because it's easy to look at like a 40-year calculator and be like, okay, if I save $1,000 a month, then I can be a multimillionaire. So I'm good there. But like making another $1,000 a month seems insurmountable to a lot of people.
Yeah.
But I think I know wealth is much more important than income long term. And like from a safety standpoint, if you have $2 million, you're probably safer than if you have like $80,000 a year in income because it's passive. But I feel like I feel better when my income is higher than my net worth is up. Like if I make $40,000 today from my portfolio going up, it feels like nothing. But if I make like an extra $5,000 in active income, like it feels much better.
Yeah.
How do you think people should balance that? Like where they're, I think so many people spend time focusing on their portfolio, even if it's just a couple $1,000s when really they should be thinking about active income. How do you think about that?
I mean, so I've been changing my mind about this live in real time for like, the last 6 to 8 months. I think everyone, I have never met anyone. I'm trying to think, dude. There's so many ways to slice it. Which is why I'm like hesitating and pausing. I have never met anyone that is actually doing the 4% rule. Maybe this is just a me problem, but is actually doing the 4% rule. Like actually just being like, yeah, here's my portfolio and I sell this much and transfer it to my joint checking account every month. Like I've never met anyone that does that, dude. So part of that is just my own like literal physical blocker that I have never seen anybody do that. So I'm not convinced that, and I actually made a video about also, I don't think that, especially for how old like me and you are and how old people that like the whole concept of like working and then retiring and even taking the word retire, like working and then not working, I just don't think life is that bifurcated. I don't think life is that bifurcated. I think what happens is that you trip and stumble into financial freedom and you kind of like, you literally kind of fall into it because there's so many variables in life. There's like a really old Tim Ferriss thing that he used to do was like, imagine the worst possible scenario. Like imagine the entire worst possible scenario. And then it's like, are you living under a bridge? Write it down. What is the worst thing that could happen? Write it down. Are you under a bridge? Well, no, I would drive Uber and then we would like stay at my parents' house and kind of like combine for a while and like sell the extra snowmobile that we don't really need. And then, kind of climb out from there and like, dude, you're not going to be under a bridge. Like you literally won't. And then you build back up from there of just how many variables there are and especially type A people that are already consuming personal finance information. They're all, even you already, and you gave the hedging today of like, yeah, if YouTube went to zero and then you have the safety net of the thing and one option is to sell down the investments at some sort of rate and the spreadsheet says it. But then what happens on month 3.5 of doing that, or like day 47 of doing that, Joe texts you and is like, hey, I'm trying to start a thing. And you start getting paid $1,500 a month from Joe to deliver newspapers. Like, I don't know, like whatever, like that thing happens. And then you retrench into the new, like relaxed working thing that you're doing. And your investments tread water until that income matches the old income. And Meanwhile, you and your partner go through all the conversations of like what actually matters in life. Like maybe this like redoing the kitchen like is fine for now. And then you do it later. Like that's what happens in actual life. Like in actual non-spreadsheet, non-YouTube life, that's what's happening. And so the 4% rule is, or so with all that, the income, like having the ability to make income, having 24 hours, having the ability to make income augments that easier than being like, I need to rack up this large portfolio. I need to rack up this large portfolio. And so it's like having multiple plates spinning. But to your point too, of if you only have an $80,000 job and you don't have a portfolio, then you're right. You're then kind of weak. That's a weak area for you. That means then if that leg of the stool gets kicked out, you are going to like the worst case scenario that you're writing out might be a little deeper than if you did have a portfolio. And so that's why I believe income matters, because I think income and it does take mentally the ability to be like, no, my income is a switch that I'm able to throttle up and down. My income, a lot of people just accept that, oh, my income is what it is, or like I am this and whatever. But I think you do have more control over your income than you give yourself credit for, but it takes energy to, change your mindset about that.
Yeah. And you have to, if you want to do anything entrepreneurial, you have to spend time that doesn't pay anything, I think. And a lot of people can't get over that hurdle, especially people that have maybe worked 40 hours a week for their entire life for a set paycheck. Because I have people like that. They're like, oh, I should do this. And it's something like YouTube related or TikTok related or some new business. I'm like, yeah, but you might not get paid for a while. Or I say like, yeah, you should definitely do that. And I'll help you. And then they're like, okay. And then they never do it. It's like, well, people just can't get over like not getting paid anything for a big potential upside down the road. And I think what you said about like generally you go back to work, I think that's true at our age. But I think as you get older, there's so much pent up stuff that you've wanted to do. And you're so burnt out a lot of the time from your normal job, if you've stayed there for a while, that you don't like it, that those people might not go back to work just because they like hate it so much, or they have hated it, or they want to travel so much. Because I have family members like that have just been talking about quitting for years and never have. I'm like, you could quit. And they're like, yeah, but I want this or that, like some like material thing, like a new house, or I want to go on this big trip. And if, we retire, we can't go on that big trip, but they could, or they could buy the new house, but it's like, then they don't have the cushion. And it's just like the 1 year more mentality, which
and that's where, and that's where, dude, there's an identity component to this. And this is why sometimes on the YouTube channel, I go off on these like random other like mindset videos. There's an identity component to this where if you, so say you're working, but you don't like your job and you want to get the XYZ lifestyle thing. And so you keep going the one more year, because you don't want to sell down your nest egg, right? There's a middle path. Like the middle path is
coast fire.
Like, yeah, the middle path is stop working, like stop doing the job you don't like, augment the lifestyle thing downwards by like 20%, and then drive Uber and sell half of what you were gonna sell DCA out of, and then combine that. And your net happiness, which is a very fluctuating like thing, will go up. Your net happiness will go up in that situation, and you're going to realize a lot of stuff about your identity doing that.
Yeah. Yeah. We've had these conversations, my wife and I have had this with some family members, and it's hard because after doing something for decades, your identity is tied to it a little bit, and you don't know like what you do on a daily basis. Even if the thing that you are doing right now, you hate, like there's something in people that just make them appreciate knowing what they're going to do. And then they have maybe like an excuse to not do other things. So it's just interesting. I think a lot of the time people don't think about like, what's a big picture? Like Like this is a tangent, but like we talked about value accrual and like how companies have to pay dividends. Like that is the end goal of investing in any company, whether it's a growth company or a dividend payer, is that they will pay you dividends at some point.
Yes.
That's how the value goes up of the underlying shares, is that they can pay more in dividends if they decide to. Like there has to be a transfer. Because otherwise you get nothing. Even if the company goes up 1,000x, if there's no, like, that's the whole point of investing in a company, is that they can provide you cash. So like a lot of people, I think, lose the point of investing in companies. And I think people lose the point of why you invest in the first place, is so that you can do what you want. It's
Yes.
not so that you can pay. Well, I guess, yeah, so that you can pay for things that you want to, but like,
What?
yeah.
Okay, let me make another weird comparison on that. All right. The what do you want? What do you want? And want to know another thing that's happening in society that's forcing people to answer that is like, so I spent all last week setting up OpenClaw. And it's like, so you have a computer, like, okay, for just is OpenClaw, like, will it break and have like frustrating things that go with it? It's not a magic pill, like whatever. Absolutely. Like, yes. But is it like also extremely powerful? And can it automate work? Yes. But what's weird is that now I have a computer on my desk that will do whatever I tell it to do. Like, so what do I want? Like now you just have to answer. Like that unlocks, like you have a computer that will do what you tell it to do when you learn how to tell it in the right way. But now you have to answer the actual harder thing of like, well, what do you want? What do you want? And a lot of people, like the reason why money and investing is so fascinating and so tied to everything is because you're basically saying, what do you want? Like every single time. And then look, here's another component to it. Like the health, like that health stuff. Like you're saying like, what do you want? You have $20 like for dinner. And like, what do you want out of that $20 like for dinner? What do you want? And you're answering that question every day. And it's tiring. It's super tiring and takes a ton of energy to clarify in your own computer brain, what do you want?
Well, it's easier to get stuck in the grind of saving until you hit $1 million portfolio than to actually pull the trigger and stop investing when you hit the $1 million portfolio and enjoy it. I'm just throwing out a number. Or same thing with like a job, right? It's easier to stay in the grind rather than start something new. And then, yeah, your decisions are like made apparent. You have to make decisions, and like you're judged, or you think you're being judged on how you're actually spending your time. And you should get stuff done, and you don't feel like all the time. But yeah, that's where I think that OpenClaw is interesting to me, because I went down the rabbit hole with what's that podcast, the All In podcast. Like I was super pumped up about OpenClaw, and then I was like, I'm gonna buy one right now. I pulled it up on Best Buy, and I'm like, well, what would I have it do? Like I just don't, like, same reason I don't have an employee. There are like some things that come up that I'm like, oh, that would be nice that if I didn't have to do it, but I don't have enough stuff like that to where like even OpenClaw, unless I came up with something really good, it would be more like a test, right? And it would just spend time without a real ROI. But if you want to make a lot of money, you teach people the prompt for OpenClaw, like have a course on how to use OpenClaw, not actually doing it yourself.
You've already called this out really well a couple of times across the conversation, whether your time, your current, what are all the things we've talked about today? Your time can be spent like analyzing how value accrual for MSTR common stock works. Your time can be spent discounting the cash flows of STRC and how much that's worth to you after depositing the time into it. It can be on hard money loans. It could be on wholesale on Walmart, or it can be on automating tasks in your life via like OpenClaw. All of those cost a time investment. Oh, and then here's another thing I've gotten more. This is not original to me, but I've like absorbed it better than I ever have, and I believe it more than ever. You're gonna pay with time or money on climbing over the hurdle of those 5 things. None of those 5 are bad. None of those 5 are quote unquote good or bad right off the bat. Those are just things. They're just things. They're just things that are happening in the world. All of them have downsides and all of them have upsides. You're going to pay with time or money to find the answer on those 5 things. Or you're choosing to not engage with it at the moment, and you're just focused on other things. And all of those answers are good. All of those, like ignoring things is also good if you know that you're doing something else right now.
Yeah. Yeah. And I go back to like how much my time is worth all the time. And like when I'm thinking about hiring someone to do something, I'm like, should I just save the money or should I pay them? And then I realize like eventually I try to hire out as much stuff as possible right now because I have more money than time, especially with family. But then like there's sometimes where I'm like, I'm doing nothing right now. And like I need, like, let's say I automate everything.
Yep.
What am I going to do? Like sit around and watch TV and like rot to death.
Yeah.
Like even if I automate the channel and I got a clone of me to like, what am I getting out of life then? So I think there is something to like automating, but you still have to do some things because otherwise, what's the point? If I can just live in a vegetative state and get people to do everything for me, and I think Mr. Money Mustache had a post about that like a long time ago. I'm just pulling it in my brain now, but he takes it to the extreme that like you hire everything out and you're just sitting with a bedpan and someone like attends to you. Like it's not a good life. So I don't know. It's what I want changes like every couple months, and like my net worth obviously changes and like my goals change. Where we had a health scare with one of our parents recently, and like when our son was born, he had some health stuff too, and it went from like, okay, I need to be able to pay for this health stuff for like my immediate family. And I don't want it to be like, it wasn't stressful from a money perspective because we had already reached a point where it wasn't. But like from a life standpoint, obviously really stressful. But then like another layer up, like, okay, what happens if one of our siblings or like a parent has something happen and they're not financially taken care of? And like, yeah, we could let them go to the, like, maybe not the street, but like to some really bad situation. But like I think as time goes on, your goals just get bigger, or like maybe you just try to take care of more people. And it just constantly changes. So it's
I saw a post the other day from a fire account too that was like your vision of fire in your head when you're in your 20s with roommates is different than the vision of fire in your head when you're in your 30s or your 40s and you have kids. It just doesn't, it changes. And the concept of having, I think it is possible to have the lifestyle you want and the day-to-day you want and the portfolio you want all at the same time. I think that is possible. And I think people that tell you that you have to sacrifice one of those for the other, again, is fine through certain phases. And there can be some like truth to that. But I just think you have more the ability to customize what it is you want and make progress towards it. I would say is higher than ever. But it does require a lot of like energy.
Yeah. Time or money. You can get a lot of stuff done. But if you have neither, then you can't really do anything. And if you have both, then obviously that's the best thing. I know recently you said like life feels very repetitive.
Yeah.
I've been feeling that a lot. Like I think I didn't shout out loud, but I think I said something out loud when you said that. Because I've been feeling that where maybe it's the age of our son or something, or maybe it's the weather here. I don't know. Like we're stuck inside. We just had a blizzard, and it's really cold. And it's like our son can like crawl and walk and stuff, but he's not even talking yet. So it's like we have the same routine every day. Like 8 o'clock, wake up, eat together for an hour, get ready, eat together, feed the baby, like change the baby. It's like an hour and a half. Then I go work for an hour. and then like come back up, play. And it's just like every single day. And I'm like driving myself insane because I thought I'd really like this stage. This is probably away from the financial talk a little bit, but like it is just so repetitive. Like
Yeah.
I love my son more than I ever thought I would. I love my wife so much too, but like it kills me to sit there for 4 hours like with nothing to do. And maybe it's like I've been looking inward. Is it like my own fault for not just being able to enjoy silence, and nothingness? Or is it that like I'm just programmed differently, but like I'm going to the store to pick up like an item extra for dinner that would go well just to like kill some time, or
Yep.
like I go on a walk even though it's a blizzard with the sun and I like put a protective pot around him so that
Yeah.
he's warm. I'm like freezing to death, but I'm listening to a podcast. But like, yeah, I don't know. I just feel like the need to do more stuff into like pastime because otherwise, yeah, I don't know. I've been having a hard time with that the last couple months.
No, dude, I think so. I think it's all of it. I think kids, I think the stage of having young kids is definitely a contributing factor. I think there's a chance, like the weather, like I mean, I was walking around laps in our pool yesterday, but it's the same feeling. So it's not like, I definitely think the stage of life with kids is a contributing factor of it. But I also think that the personal finance element of it and the like what even is employment and identity is part of it also. And I think that I think work from home in general, the amount of work from home in general, the time spent with your family, net minutes per day with your family is up like by a lot compared to previous generations. So no, dude, I think it's all of it. And there's like this that went viral on Twitter like a few weeks ago, months ago, with the dad being like, "Why can I not enjoy like playing catch with my son? Like this is supposed to be an idyllic like thing. Like why am I not able to like relax into it?" And I honestly don't think that's like talked about enough like at all. I do think there is then a health component to it and a like understanding how our nervous system works and understanding how to drop into the parasympathetic like part of your nervous system is an actual skill that we all are actually pretty deficient on, which is why I've just been binging a lot of like Brian Johnson. Like I watch almost everything he puts out, and I've been thinking a lot about like, yeah, why do I not give myself credit for hanging out with my kid or unstructured living room time? Yeah, why do I not give myself credit for engaging in unstructured living room time at the same way that I give myself credit for sitting in front of my computer? Like,
Yeah.
dude,
Yeah, because a lot of
OpenClaw,
time
you could put an
you can feel
OpenClaw
like,
and then be able to texture OpenClaw when you're in the living room. Is one thing you could do.
yeah, yeah.
But
I think like a lot of the time I'll be on YouTube and it'll feel productive, but it's just wasted time. It's not like I'll remember any of it or like it really contributes. But like, yeah, I'm sure not at this stage for my son, but like 4 or 5 years from now, he'll love spending time and he'll remember that. So yeah, like there's a much higher ROI on that than anything else. And it is weird, like you said, the person that can enjoy time with their son. Like I think not that that's weird, but like yeah, our bodies just crave dopamine and like something new. And I think that's difficult. Especially when you do work at home a lot, like you don't get a big break. Like I work an hour at a time and then I go up and then like I come back down and then it's just like, and yeah, in theory, like children, when you like play with them, it's all fun, but like there's a lot of stress that comes with even playing with your child. Like, your 1-year-old is playing ball and it's like awesome. And then all of a sudden he runs and then smacks his head on something. And then it's like crying and then it's whining and then it's playing and then it's crying and whining. It's just like stressful over time. And maybe, I haven't, we're a family that doesn't just like let the baby do whatever he wants. Or like we only have one kid. So it's not like rub some dirt on it. It's like, no, we're constantly trying to protect him
Yep.
from stupidity, like from his
Yep.
own actions.
Yep.
And yeah, it's just like constantly stressful when you're watching a 1 to 2 year old. It's just always constant stress. And it's like flashes of fun and then stress. So I don't know. That's something that I've been working on recently, is just trying to enjoy more and relax, because I do have a hard time relaxing. And part of it is like my phone controls me in the sense that like I feel it vibrate, I look. Like
Yep.
it controls me all the time. So I'm pulled out of things all the time.
Yeah.
So I have to stop that consciously all the time.
Yeah. Do you have an Aura ring or like a wearable
No,
or
but I
anything?
thought about getting one recently
Yeah.
for sleep.
Or do you turn your phone on red mode like at nighttime? What kind of
Is
hacks
that
are you
like
doing?
the color palette?
Yeah, like if you triple click the side of your iPhone, it'll flip to red. Or you can choose between gray and red and different things. What do you what kind of hacks are you doing?
Nothing.
People in the
When I
chat want to know what
triple
kind of
tap my
tea you're
phone,
drinking. Well, is tea one of your hacks?
no, it's not. This is because of my sore throat. I didn't want to be coughing a lot on
Got
stream.
it. Well, it's working.
But I'm trying. I have a dentist appointment in a few hours, so that's going to be interesting, keeping my mouth open without
Yes.
coughing into their face. But I have no hacks, I don't think. I'm trying to think. I've been running a good amount, like maybe 3 or 4 times a week.
Nice.
And we have a babysitter a couple times a week too, so that helps, because then I can like guilt-free get away for a bit. But yeah, I've been running like 2 to 5 miles each time. And yeah, I like that. It's something that's like non-wealth related that gives you achievement, like you were in high school if you played sports. But yeah, I don't know. I guess I just try to spend a lot of time with family and friends to like have fun.
I ran a 5K on my treadmill. I got like a 34 minutes. Is that good? It's like an 11-minute mile.
I'd say do you run very much?
No, I go walking a lot. I walk a lot, but I don't run very much. No.
I'd say that's good for someone that doesn't run very much.
Mm-hmm.
But yeah, if you're like running,
what would you like to see me at? What do you want to see me at?
8.5 minutes.
Okay.
A mile.
Back to back.
So that's 7 miles per hour, I think.
Yeah. Perfect.
8.5 minutes a mile for a 5K, I think would be really good. I think you could get there pretty quickly. I hated running until like 6 months ago. And I was like, oh, if I just go slower, because I always played basketball, so I was used to sprinting, and you get exhausted sprinting on a treadmill for a long distance. So I was like, oh, if you just go slower, it seems a little bit more boring, but you can actually run a lot longer. Light bulb moment, even though it's so simple. But I just like started watching TV, and I was like, oh, I'm actually getting like some dopamine from going longer distances, or like it's actually fun. So I've been doing that more. Yeah, I don't know. I go back to like what do I want my life to actually look like? Mm-hmm. And yeah, it's pretty much this. So I have to.
What content do you consume? What non-personal finance? What's your second layer of rabbit hole do you watch content
on? It changes. So I've gotten really big into like running. I was really big into that, and I'm still running, but like I dove headfirst into it. Then I was like, oh, chess. I want to learn chess. So I did that. But I'm not very good.
What's your ELO?
Like 850.
That's good.
It's like enough that I know how the pieces move, but I have no real strategy except for like a move or two ahead. And
850. Dude, I like sit around 600 and then I'll like tank down 400 and just like screw a bunch of games, and then I'll like have to fight back up to 600 and I'll like flip at 600.
Yeah. Well, I feel like mine might be off because I'm on Duolingo. Maybe it's like a different. The ELOs may be slightly different.
Yeah.
But I'm also really early on too, so I think I move faster than you.
Yeah, that's good.
But then I got really into bourbon, and then recently I've been watching a couple of different animes, which is like I watched Dragon Ball Z growing up, and I'm like reliving those days through other animes. So I've been like listening to some anime stuff, which is like maybe 20 minutes a day, and I listen to like 4 hours of personal finance content. So I don't know, it's just like trying to get away completely from personal finance for a little bit each day.
Yeah, definitely.
What about you?
I mean, so my second layer of content for sure is like longevity stuff, like
Okay.
just Aura Ring, like Brian Johnson, like how to increase your HRV. Yeah, I'm pretty down that. I like stopped so peptides. Like, dude, I'll just hit everyone with everything. Like, so I take 0.5 milligram of retatrutide weekly. In 2026, I stopped alcohol and switched to THC.
Okay.
So I've drink these like THC drinks instead of beer, and like gummies instead of drinking alcohol. And yeah, I'm just like obsessed with. I go to bed at 7:30, like right after my kids go to bed. And I'm like obsessed with trying to hit. Aura Ring has like triple crowns, where you like your readiness is high, your sleep is high, and then your activity from the day prior is high. And so that's like so shout out to another thing. I'm throwing a conference in Southern California, November 3rd to 5th, and it's like a financial wellness and physical wellness thing. So there's a resort called Murrieta Hot Springs, here close to where I live, that has like all of the like 2 different kinds of saunas, cold plunges, hot tubs, like all of that stuff. And so we're gonna have like the estate planning and life insurance and like Bitcoin talks, and then I'm gonna have some like health and wellness talks about peptides and longevity and that kind of stuff. So yeah, that's definitely my second rabbit hole right now.
That's awesome.
Yeah.
We just bought a sauna.
Nice.
It's like a custom built sauna near us, so it is going to take like 2 months. So I had all the contractors in, like moving electrical and
Sweet.
plumbing and stuff.
Sweet.
Yeah, it comes in a couple weeks, and hopefully we'll be using that a lot.
Yes, definitely.
Yeah.
My other
We
one
need
is
it.
probably golf, but I don't like play golf. I like go to the driving range sometimes, but there's this I told you about it at the beginning. There's a live stream, and they have 2 shows a week. It's called Dan on Golf. He was on the Netflix documentary, like the Net Full Swing. So golf drama. Like I like following golf as if it's like a reality TV show.
That's cool.
And on the weekends, because I like getting to my TV early. I like that it's on all day, and I like that it starts early because I beat my sons to the living room and I put on golf, and that just like sets the tone of the living room instead of cartoons. And so
Yeah.
dude. All right, let's hit these. Okay, so I asked the chat, back to STRC. I asked the chat, hey, if you don't hold well, first off, we did a poll. 56% of people in the chat hold STRC. And I said, if you don't hold it, why do you not hold it? So first one, or let's start here. Ideal ratio of MSTR Common, STRC, and raw Bitcoin. What are your thoughts on the ideal ratio of MSTR, STRC, and then regular Bitcoin?
Me or you? I feel like you'd be able to.
I'll go first on this one, and then you can go first on the next one. Okay, so I think first off, this is the exact right question because everyone can mix the ratio that they want to match whatever ratio of growth to income to stability that they want. And so first off, it's just the exact right question. So you have to ask yourself, how much monthly income, the way that I try to tell people about this is start at how much monthly income do you want your investments to throw off? And back into it from there. So if you want, ask yourself that. If the answer is none, and you're just, then you have to ask yourself, okay, well then are you focused, is this savings money that you want to stay stable, or is it growth money that you want to see grow? And then that tells you how much to lean on STRC versus how much to lean on MSTR. And of all of those things, based on whatever you answer yourself, I would say that don't lean on MSTR Common super heavy. Or I would also say, think about it in terms of all of your accounts. So like for me, I have a small amount of MSTR Common in a Roth IRA, but I'm not concentrated on that day to day. And I already explained in the stream why I like other amplified Bitcoin options more than MSTR. But yeah, so the ideal ratio has to do with how much income you need, how much growth you need, or how much stability you need.
I'll hit on it real quick too. I think depending on your age, it changes a lot, or your net worth, like what your goals are, kind of like Brian said. But if you're someone that's got like a $50,000 net worth and you're not going to be able to retire until $2 million, you probably shouldn't buy STRC in general. I know that's probably unpopular, especially on Brian's channel. But like, if you're bullish on Bitcoin, you're not even close to retirement age. I don't think we can really model out what STRC is going to be in 10 years. So yeah, you're giving up 40% upside if you believe Bitcoin's going to go up 50% a year, or even 25% a year for a decade out. Like, that's huge. And I feel like it feels good to get STRC, but if you're not close to that retirement age, or like, if you're going to get $1,000 a year in STRC, versus losing out on $5,000 in upside on Bitcoin every single year for so long, it just doesn't make sense. For MSTR, I only buy when we're in bear markets and like everyone thinks it's going to zero, and then I just put a little bit in it. But it could be because my risk tolerance is lower as well. I don't like to put as much in MSTR as Bitcoin.
Yeah. Okay, so the next question, what is the best account to hold? This is flipping back and forth between reasons people don't hold it and questions. What is the best account to hold STRC in the US? So I actually, going off of the answer that we just gave, the best account to hold STRC in the US is a non-taxable brokerage account. Because I think Sam's comments about being close to retirement are fair. I also would say, if you are someone who has a large high yield savings account or a large no interest paying checking account, and you are the type of person that just likes having a safe high cash balance, STRC can also be like a tank for that. And so basically viewing it not necessarily as stocks investing. It's not stocks investing. It's not Bitcoin investing. It's basically 1 degree up from a high yield checking account. Because a high yield checking account, what is a high yield checking account doing? If you're at SoFi, what are you doing? You're inside SoFi, and then SoFi is buying US treasuries behind you, and they're giving you part of it, and they're keeping part of it. So if you're in a high yield savings account, you're already participating in government treasuries. So if you're already orange pilled and you're participating in government treasuries, some percentage of your government treasuries money could be an STRC getting paid higher than government treasuries. So the best account is a non-taxable brokerage account.
Yeah. And I think that like some people say, oh, you should put your dividend payers in like a Roth or something so that you don't have to pay taxes. But like the whole point of STRC is not the upside, it's the constant income. So otherwise, like you're not going to be able to touch it unless you're retirement age or something. But yeah, what's the point of having a 12% dividend payer when you can't get the dividends?
Okay. Next person, I'm Canadian, so I don't want to incur foreign withholding tax. Makes sense. Yeah. Okay. Only reason I haven't dabbled in STRC is because don't have a regular brokerage account, only tax advantage ones, and then focused on growth centered investments at this time. Yeah, I think exactly. You didn't what? So what kind of tea is it?
Oh, I forgot the brand name, but it's like wild berry tea. I want something zingy to keep me, interested.
I'm very bullish. Honey. I'm very bullish on medicine balls from Starbucks when your throat's hurting. Starbucks, and just order the medicine ball.
Okay. Costco has some immunization shots or like immune shots that were on sale, 33% off. So I had some of those, but it was when I was already sick.
Yes. Okay. Yes, guys, love the parenting. I like talking about parenting stuff, and people are saying they're older sons and like, yeah, it's hard. Yeah, I don't think it's talked about enough. Okay, I haven't bought any STRC. I think Sam hit the nail on the head. $10,000 into STRC yields $100 a month, which is okay, but that's like 12.5% of a Bitcoin. 10,000 is 12% towards a full Bitcoin. Can't get over that mental hurdle. You go first.
I think that makes sense. First of all, I'm kind of in a similar space where my confidence in it doesn't allow me to put enough in it to make it substantial to think about. So like if I want to put 0.1% in it, it's not worth me spending the time and paying attention to it. But I'm not at the point where I can feel comfortable putting 5 or 10% of my net worth in it, or like consistently dripping into it, just because I feel like there are better opportunities out there. But I'm also conflicted because I'm like, well, is it less risky than the private loan that I just funded? Like, probably, and it takes
I
a lot less.
think
But
here,
the
okay,
business,
guys, here's for the channel. Here's what I think. This will be Sam and I's recurring thing. No, I don't think STRC is better than the private loan you funded because, again, that's a business thing you're pursuing and testing. So I'd put that at the top of the most interesting things you're doing right now. Should STRC come out of Sam's Bitcoin money? No, because that's allocated to growth and like Bitcoin is the growing index. I think the most close thing that you have is VOO. I think VOO and Stretch are the things that are at odds with each other, and you, have higher confidence in VOO than ST, which makes complete sense. And but I believe comparing wise, like swapping and swapping out, like if I was the wholesaler, like battling it out with your financial advisor for like the piece of the portfolio, that's the pie that I'd be like, look. No, like right here, that pie right there. Sam has a great portfolio, that part right there. And so, which is why I would answer to Jared's question about, when I hear you say this, you're like, what's the point in 10,000 into STRC? It only pays $100 a month. And I could put 10,000 into Bitcoin and be almost like, a tenth of a way to a Bitcoin. Absolutely. So yes, absolutely. So my question back to you is, where's the $10,000 coming from? Is it coming from your high yield savings account that isn't really Bitcoin money? Or is it like it is Bitcoin money and you're just waiting for the right time to buy Bitcoin for whatever reason? Like, if it is Bitcoin money, then sweet, it's Bitcoin money. Like, absolutely. Like, we're great work, and like keep getting to 0.21 and 2.1 and like all absolutely. But if it's high yield savings account money for property taxes or Christmas, then it's just a thing of the $100 a month fills your gas tank instead of $4 a month.
Yeah. It's funny because I have actually been doing that with some options recently where it's like this money is in cash, but I'm like, I'll already buy this company if it goes down this much. I'll make like another couple $100 if I sell this put. So I'll buy Amazon if it goes down another 10%. I'll probably buy a lot of it because I feel really strongly about it. And I just sell a put at that level, and then like I make a couple $100. And does it really move the needle? No, but it's kind of nice. So I do that anyways. Where the STRC should play a role, this is probably even easier for you to pitch me on it. I have a lot in money markets right now, paying 3 to 3.5%. I even have high yield municipal bonds because it was sitting in cash anyways, and I was getting like 3.2%, and I was being taxed on it. I'm like, I can get 4% and not be taxed on it. So I put a significant chunk in that all in one go. Yeah. And I'm like 15% cash right now. And I realize it's not the best long term, but at the end of the day, it pays for it. The yield on it actually pays for a lot of our living expenses. Yeah. And like it just helps me sleep easier at night. Yeah. It's super inefficient, but I've been dripping a lot of money, at least relative to me, a lot of money into VOO every single day and buying stocks. But like my income has stayed pretty good. So I'm just putting like everything I make every month into the market and just replenishes. But it's super inefficient because I could go buy and almost double my Bitcoin position, but I haven't. I could go and put a lot into equities or real estate, and I haven't. But maybe STRC.
I think you're an income, but you just said it's covering your living expenses, which is awesome, like and beautiful. And I think that's I think the bell curve of having income investments that are treading water on your lifestyle, and then being able to go call it aggressive or medium growth while taking shots on goal at starting your own business and doing entrepreneurial things, I think is I truly believe that's like the magic ratio that is going to continue to make more and more sense for more and more people. Just with I think that is taking everything we know about personal finances and everything that's uncertain about the future and smashing them both together. And the reality that we're all sitting in our home office with capacity to click buttons and do things. So yeah, I think it's great. All right.
Yeah.
Go ahead.
I was just gonna say I feel bad for pulling away from the conversation again, or from the chat, but I did want to ask you, how do you allocate capital? Like you're buying the dividend payers, you have real estate and stuff. Like, do you have an emergency fund and you're like, okay, 6 months or 12 months or whatever it is, every dollar on top that I have over that, I'm putting into this because yeah, I just have that large cash buffer and I go back and forth. Like, obviously, it's not efficient, but makes me sleep a little bit better. But also, I could pull from VOO if something came up, and like nothing's ever come up that was so substantial that I had to pull from this money. So I'm curious how you go about it because I feel like I'm stuck on the, like, you say Bitcoin is the hurdle rate, and then like some people say VOO is. I'm still like normie curve too far down where I'm like, VOO is a hurdle rate, but I'm still willing to take less than that because I'm allocated too much to cash for an opportunity fund, like on real estate or VOO or something like that, or individual stocks or Bitcoin.
So you're asking where's my incremental dollar going towards right now?
I'm asking, how do you allocate it? Do you have like a certain amount that you put in investments every month, like regardless of your income, as long as you're like treading water, or is it like I need 6 months living expenses, and then every dollar on top of that goes towards investments?
So I'm not DCAing investments right now. I'm not DCAing Bitcoin or the dividends so on my dividend portfolio specifically, I pull out 1,500. It makes like 1,800 ish. 1,500 gets transferred to joint checking for bills. 300 stays in. So I guess in that sense, that one thing is a little bit of a drip in just because of my personal timing on BTCI. Like the principal has been hammered on that specific bucket. So that's the way I'm achieving both goals of like propping up the principal while achieving the income goals. Outside of that, I would say like my incremental dollar right now is like going towards lifestyle and like making money. Like I just bought, like I talked about the Limits Express thing on here. Like I did a $50,000 inventory buy of that because I actually believe like I'm pretty bullish on that becoming like a core business thing that I'm gonna do. Like I want to learn that game and partner with those guys and get into like switching from residential real estate into commercial real estate. Like that's my like entrepreneur path, combining with the like doing the cost segregation and the bonus depreciation thing. So I'm trying to switch from like month-to-month budgeting into quarterly budgeting and really have my own business income higher than it is like right now. And we kind of got into this really briefly when we talked like 2 months ago or whatever, where you're able to actively DCA and whatever higher than me right now because your business cash flow is more consistent than mine is.
Yeah, that makes sense. I mean, you're in the earlier stages, I'd say medium stage of the YouTube channel. And like you said, reinvesting a lot, like a chunky fat amount into testing out a sponsor. So that makes sense. Yeah, I always have a hard time because it's inefficient, but at the end of the day, if it makes you sleep better and if it's not like spending 90% of your income or 95, 99%, like just in cash and storing up cash isn't always the worst thing. But
no, I'll also say another thing. So I use the word like hurdle rate when I'm like talking about finances and talking about like finance philosophy. I don't like, I talk about this. That's more of like a macro thing to say. Like I believe that the S&P 500 and Bitcoin are competing with each other. when I think about my own life, I think about cash flow and matching up income streams with bills. That's the paradigm through which I look at it, where like my goal is to match up income streams with bills, increase income so that we can increase our bills and increase things that we're paying for, and then globally have the net worth number like going up. I'm not worried about like I don't have a year-end video where it's like I beat the S&P 500 by 4.5%. Like I don't, that's truly not what it is. It's like no, like last year I put in a swimming pool because like I know how to take out like a $300,000 in loans. Like that's because I know how to match up like interest rates of loans with our income streams. Like that's way more how I think about it through. I think about cash flow way more. And so I don't care. That's sweet that you have like municipal bonds that are paying for life expenses. I would say if anything, no, dude, it feels like you have capacity to do more entrepreneur things. Financial and time. It feels like you do.
Yeah. It just, and I like all of this stuff. I talk about this stuff with friends all the time. Like I had a plumber come in for that sauna. Like we had to move a spigot outside and like put something in. Like I talked to him for an hour and a half about business, just while he was doing work. And I was like cautious about it because I was really interested, but he was really interested too. So he went from like spending an hour here to like 2.5 hours. And like, I love all that stuff, but I get pulled into wanting to invest in like, these private companies or like work on something with other people. And at the end of the day, eventually it turns into something not fun.
Yeah.
Because there's stuff that I have to do that I don't want to do. And then I'm like, well, I didn't actually make much money and there's stuff that I don't want to do.
Yep.
So, or, it's just a waste of time in general. I've tinkered with stuff over time and built other businesses and stuff, but nothing is as good an ROI and and doesn't like drag on lifestyle as this.
Yep.
Like I like talk about this stuff. Like we're just chatting like we would if we were on a phone call. So yeah, that's where it's hard. Like I almost bought a brewery like a year ago or a year and a half ago when my son was born. I was like, well, what am I going to be able to point to like that I've done or created or something? Yeah. And there's this brewery that I thought would make sense. That's like awesome and we go to all the time, but it's like, no, then it just becomes a job and it doesn't pay any better than VOO. Like I could just put all the money in VOO and then just drink beer there free forever. Like, not have to worry about anything. Yeah. So I don't know.
No, I think totally. I think which is why stacking cash while you're feeling the stage of life that you're in and testing what types of businesses or testing what types of things you enjoy doing day to day is the only way to do that is to do it live. That's the way I felt with dividend stocks. Like the whole portfolio I've only been a dividend stock investor for less than 12 months. Like, so that's all practicing. Well, how is the principal changing relative to the dividend? How is the, like, it's all of that. And so it's not, no, man, it makes total sense. Let's hit a couple more of these and then hit some closing thoughts. Yeah. Why buy STRC when you can just buy Bitcoin? Yeah, absolutely. If you're in growth mode, stick to Bitcoin. True. The age and place in life has a factor, does weigh in the direction to whether investing in STRC or what percent of the portfolio. This person has about 20% in accounts combined with other yields. Yeah, that's awesome. Perfect, man. What else? Was there anything else you wanted to hit today, or what's some closing thoughts?
Yes. Two quick things. I sold an option on BMNR. It got filled in the very beginning of our chat. I know, like you have the yielding ETFs, but this was interesting just because there's so much volatility in BMNR that the premiums are massive. So it's 1 month out. It's at $20. The price of BMNR right now is at $23.30. So BMNR would have to fall 16.5% in 1 month. And I got a $1 premium per share on a $20 strike. So I got like a 5% yield in 1 month with 15 or 16% downside protection. So I don't know. I did just 2 contracts, but I was like, oh, that will pay me a couple $100 for dinner. And it's like, I think BMNR will probably do well next bull run. I'm not super bullish on altcoins in general, but still, like, Ethereum's down 60%. I think it'll be fine. Like, if we get another swing back up. So I don't know. It's something kind of interesting for such a high premium.
You're just looking for my reaction on that?
Yeah.
I think it's fine. I mean, I think so. I'm pretty fuzzy on puts. Like, I could stumble through explaining it. I'm better at explaining calls and covered calls.
Sure.
But the more
I can
where
hit
my
people
brain
with the short book.
Huh?
Sorry, there's a delay there. I was just saying I could hit you with a real quick explanation for it if you want, or like
Sure.
for people
Yeah, do it.
to know. BMNR costs $23 per share. BMNR costs $23 per share. If I sell a put, I have cash in my account, and I'm telling someone that I'm willing to buy it at $20, no matter what the price is.
Mhm.
So, if it goes down to $16, I'm willing to buy it at 20. If it stays at $23, like, I won't have to buy them at 20 because no one will sell them
Yep.
at $20 when it's worth 23. So basically, I'm giving someone else downside protection, and I'm getting paid for it. So, unless BMNR goes under 20, I don't buy the shares, but I just got $1 on every $20 paid in premium. So I get cash credit right away. So like I said, like, you get 4% in your savings account or something. I just made 5% in a month. So it's a 60% annual yield, but I'm taking on some risk if BMNR goes down a lot.
Yeah.
So
this is a cash covered put.
$4,000.
This would be called a cash covered put because the cash is in the account. Yeah.
Yeah. Which is what I'm doing with Amazon a lot right now too, which is obviously not crypto related, but I'm doing that a lot because I'm willing to buy if it goes lower, and it just protects someone else's like massive downside.
Let me ask you this. When you do this, so you're selling cash covered puts for income, and someone could do a covered call is the opposite. You're selling the ability for someone to buy it and you own the shares. Whereas opposed to a naked put or a naked call is when it's not in the account. And so if it goes, you have to deposit it. But so cash covered puts for income, does that money stay inside the brokerage account, or are you withdrawing it to your joint checking and it's like it's income?
I leave it in the account because I don't need the income. So it's like I would just put it back into the stock market anyways.
Yeah.
But yeah, covered callers, you have the shares and you're just selling away upside. Puts, I actually want to buy this equity, and I've already been buying a lot. But if it goes down a lot more, I'll buy a lot more.
And do you have a goal per day of like, I'm trying to make $200 today doing this? Or it's more just like when you have time at your computer, the opportunity presents itself, you do it?
Yeah, it's more when the market's red. I guess BMNR is down just slightly today, so it doesn't really fit my normal criteria, but it's not a perfect science. But it's usually like, okay, the market's red, Amazon's $205. I'll sell it and get some extra money, but there's no goal for it because it's so minimal compared to what I make anyway. But it's
so
kind of interesting.
Here's my reaction to this. Here's my reaction to options trading for income. I would prefer to spend time talking to the guy on the phone about hard money loans than sitting in the account options trading for income. So like and what I would do then is I would have on a spreadsheet, on my household cash flow spreadsheet, I'd be like, currently I'm making this, and if I can become business partners with person and do XYZ business, then that could pay X per month. And like, I spend time on those loops more. But but the downside of that is at the end of the day, there isn't a new $200 in the account. Like honestly, what probably happens is there's a random like $50 credit card charge because I'm like, I need this thing to research this thing. And so that truly, if I'm like being very honest about like what is happening to me at the desk, like that's what's happening to me at the desk. And so that's my reaction to that. My other reaction is a broader crypto thing to your comment about Ethereum. Here's my broader crypto thing that I think is happening right now. I think everyone in Bitcoin and crypto is going to be a little bit right and a little bit wrong. I think that stablecoins are going to replace the ACH network and dollars are going to move 24/7. Because that's ridiculous that dollars only move Monday through Friday night. That doesn't make any sense. So I think stable coins are going to replace the ACH network. I think the Bitcoin yield curve is going to replace the treasury yield curve. And everything we talked about, like dividend stocks, are going to put pressure on public companies to pay dividends and share their profits, and which is going to put downward pressure on the concept of a growth stock in general. And Bitcoin is going to get more and more involved in like the debt market and the credit market, which effectively is Bitcoin replacing fiat money. Like if the treasury market shrinks and the Bitcoin backed lending and credit market grows, that's effectively Bitcoin replacing fiat money. So the Bitcoiners will have been right about that, but they would have been wrong about dollars replacing the ACH network. And then crypto people are mostly right about on-chain assets and stocks moving 24/7 on-chain, because NASDAQ and the regular markets is already talking about moving 24/5. And the concept of being able to verify, like when you apply for a mortgage and you email over 47 PDFs about how much money you have, you can use cryptography to be like, I have the money, it's here. Like instead of emailing 47 PDFs, which effectively is on-chain assets. So, and the reason why, like, and on-chain assets is like Michael Saylor's second thing he talks about on his stump speech after he gets done talking about all of his strategy stuff. And so globally, I think that everyone in Bitcoin and crypto is going to be a little bit right and a little bit wrong, a little bit happy, a little bit sad about everything. And it is happening in real time right now.
Yeah, no, that makes sense. I feel like that will take a minute for it to sink in for me, but, yeah. Just going back to the options for a second, it hit me too the other day that like I think Bitcoin people are fairly realistic, but a lot of altcoin people aren't. Like this sounds bad, but like there are investors in certain coins that just always think it's going to the moon, and it's like irrational, right? Or like people think that coins are going to zero. There are top 10 coins. So if you're the one that sells the volatility, like selling puts or selling covered calls, like you can make really good premiums because people are so emotional about these coins. Like imagine you could sell a put when I don't know, Ethereum's down 80%. Like you can make a good premium, or like you sell calls when XR, like if you could monetize XRP. I don't hold XRP, but like if you could monetize that, and people are willing to pay 50%, and give like, yeah, I don't know. Like there's so much irrationality that goes into crypto that when you start playing the house instead of the gambler, it can make you a lot of money. So I don't know. I might have to play with BMNR a little bit more, or MSTR options or something. But again, you can do that with Bitcoin without having to spend the time on it. So with some of those covered call funds. But
yeah, dude, this is good. The tech worked. We got a solid hour and a half in. Thanks for making the time today, man. Love the topics today. So we definitely, now that this is working, we definitely can do this more, and we'll try to push it live to both channels. That'll be fun.
Sounds good. Yeah, we'll have to work on that for next time.
All right.
Sounds good, man.